Welcome back to The Explainer. Today, we are jumping straight in to everything you need to know about NVIDIA right now. We're talking about the undisputed king of AI chips, a company with a market cap that recently blew past $5.4 trillion. But beneath that mind-boggling headline number, there's a really fascinating tension playing out. We're watching a company trying to balance completely unprecedented scale against very real physical supply chain constraints. And all of this is coming to a head right before their critical August 26 earnings report. If you want to know where the AI revolution is actually heading, you really have to understand how NVIDIA is building its empire.
Okay, let's dive into this. We've got 4 main stops on our roadmap today. 1. The $500 billion bet. 2. Beyond chips into space and cars. 3. The supply chain bottleneck. And 4. Bull market or bubble.
Section 1, the $500 billion bet. And honestly, this is the biggest story of the week.
$500 billion. Now, forget the recent stock bounces between $189 and $217 for a second. The real story is this staggering figure. A consortium of Wall Street's absolute heaviest hitters. We're talking Apollo Global, Blackstone, BlackRock, Goldman Sachs, and KKR. They are partnering with NVIDIA to put together a massive funding package for AI infrastructure. This is essentially the institutionalization of AI compute as a sovereign-grade asset class. It takes a literally incredible amount of capital to build the chips, the power generation, and the data centers for the next generation of AI. This just proves that the capital requirements have outgrown even the biggest tech balance sheets on the planet. And this brilliantly illustrates what NVIDIA CEO Jensen Huang has been arguing. At a recent private event, he made the case that returns on AI investment have fundamentally reset in just the past 6 months. They're now profitable at a scale that requires an entirely new level of financing. To put that into perspective, this $500 billion package is 2.5 times the size of Google's previous AI financing network. You don't just need the chips anymore, you need sovereign-grade capital to even power them. So where exactly is this massive wave of capital flowing in the real world? Well, NVIDIA's dropping up to $3 billion into a power infrastructure company called Lancium, which values the company at roughly $10 billion. NVIDIA gets a 20% stake for its first $2 billion, with another $1 billion tied directly to hitting electrical grid milestones. Think about that for a second. NVIDIA isn't just buying chips anymore. These things are so incredibly power-hungry that they are literally buying into the physical Texas electrical grid. They're securing a massive 1,000-acre clean campus down there, which is where the Stargate AI initiative, uniting SoftBank, OpenAI, and Oracle, first became operational.
And the ecosystem expansion definitely doesn't stop on the ground. SpaceX recently announced they're exclusively going to use NVIDIA's hardware for their future AI infrastructure, specifically for that highly ambitious StarMind orbital compute program. Elon Musk even came out and publicly declared NVIDIA's Vera Rubin architecture as the undisputed best hardware available right now. It's a crazy contrast, right? From earthbound power grids in Texas to orbital compute out in space. In fact, JP Morgan projects that SpaceX alone is going to absorb a massive chunk of NVIDIA's total GPU shipments in 2027. Meanwhile, other NVIDIA-backed infrastructure firms like Firmus are raising billions on their own.
Section 2. Beyond chips, space, and cars. Let's shift gears and look at the software side of the empire. Now, what's really interesting here is how NVIDIA is fundamentally redefining autonomous driving. On August 4th, they opened commercial use for something called Alpamayo 2 Super. Unlike traditional self-driving systems that just calculate a route and drive, Alpamayo 2 Super is a 34 billion parameter vision language action model built for level 4 robotaxis. It doesn't just drive, it actually provides a chain of causation. It takes in 360-degree video from up to 7 cameras and literally explains the reasoning behind every single decision it makes. Whether it's yielding, stopping, or switching lanes, it tells you exactly why. And why does that reasoning matter so much? Because regulators and courts are absolutely going to demand strict audits for autonomous decisions. If a robotaxi swerves, you need to prove exactly why it did it. And on the Lingo QA Autonomous Driving Reasoning benchmark, Alpamayo 2 Super absolutely crushes it. It ranks first, significantly outperforming massive general models. It beats Gemini 2.5 Pro by 15.1 points and GPT-4o by 23.2 points. It is hands down the smartest system specifically built to justify its driving decisions. But here's the absolute genius of their business strategy. NVIDIA actually gives this incredible software model away for free, and they make their money selling the silicon it runs on. The Alpamayo family has already been downloaded around 400,000 times since January. Developers distill this massive model down into smaller, tighter versions that run directly on NVIDIA's in-vehicle drive chips.
This deeply embeds NVIDIA into projects all around the globe, like Uber's current robotaxi push over in Munich. Software drives the adoption, but the hardware drives the revenue. Section 3, the supply chain bottleneck. Time to talk about the physical constraints of the real world. You really need to know this acronym, HBM, or High Bandwidth Memory. These are critical memory chips stacked right in closely with the AI processors to allow for massive data speeds. But there is a severe supply shortage projected all the way through 2027. And this isn't just some minor hiccup. A much broader dream shortage across the semiconductor industry is heavily restricting the actual wafer capacity that memory suppliers can allocate to building these vital components. Let's see how this builds into a huge headache for NVIDIA's engineers. Originally, the plan for their next-generation Rubin Ultra chip was a highly advanced 12-high design. Essentially, that's stacking 12 memory chips on top of each other, like a microscopic skyscraper. But because of production yield uncertainties and just sheer supply limits, NVIDIA is now evaluating alternatives. They might have to drop down to 8-high configurations or even older memory standards. The physics and supply chains of the real world are literally dictating their product roadmaps. And here's the crazy paradox. Even though HBM bit shipments are projected to grow by a massive 50 to 60% year over year in 2027, it still won't be enough. Demand is simply outstripping supply. Memory suppliers are going to retain immense pricing power, and just getting enough wafer allocation is going to remain NVIDIA's primary bottlenecks as they try to push processing speeds even higher. Expanding the sheer volume of GPU shipments is actually secondary to just securing the memory needed to make them fast in the first place.
Section 4. Bull market or bubble? Let's take a look at what Wall Street thinks. Institutional bullishness right now is absolutely overwhelming. Out of 37 analysts covering NVIDIA in a recent sample, 36 rate the stock a buy, 1 has it as a hold, and absolutely 0 have a sell rating. The average 12-month price target sits at roughly $308.69. From current levels around $217, that implies roughly a 39% upside. Wall Street is heavily invested in this growth narrative.
And when you look at the specific financial justifications from the major banks, you can see why. Bank of America calls NVIDIA its top sector pick with a $350 target, pointing out that the stock is currently trading at just 16 times its projected 2027 earnings. That is actually its lowest forward price to earnings multiple in 10 years. Wells Fargo and Bernstein both raised targets to $315, and the S&P Global consensus of 61 analysts maintains a clear, strong buy. By traditional forward-looking metrics, the institutional consensus firmly believes the fundamentals support the price. But we have to look at the skeptical counter-arguments here. Some really notable voices are sounding alarms. Investor Michael Burry, the guy famous for his 2008 housing crash prediction, has warned of a potential 1987-style crash. And billionaire Mark Cuban has raised a really serious caution. NVIDIA's financing efforts, where they are essentially partnering to help subsidize the very customers buying their chips, could create a fragile circular market. If the end demand for AI tools ever slows down, this tightly wound financing structure could instantly become a massive liability. So the crucial point is that NVIDIA is not operating in a vacuum. Their absolute dominance has put a huge target on their back. Tech giants really don't like being totally reliant on a single expensive vendor. Microsoft is actively developing its own Maya 300 AI chip to create a workaround and bypass NVIDIA's ecosystem altogether. And competitors like AMD, even though they're starting from behind, are continuously chipping away at that market share. And everything we've talked about today converges on one impending date, August 26. This earnings report is the ultimate catalyst. Analysts are projecting revenue for the quarter to land somewhere between $93 billion and $95 billion. Now, if NVIDIA beats a $96 billion revenue mark and issues strong guidance, it could rally the stock right back to our all-time highs. But any sign of weakness, or if they give supply chain guidance that disappoints, we could see the stock sharply drop down into the $190 range. Which leaves us with this final pivotal question to consider before that earnings call. We know NVIDIA is building the infrastructure of tomorrow, from orbital compute with SpaceX to the very reasoning inside robotaxis. The technology is real, and the capital flowing into it is massive. But as an informed observer, you have to ask yourself, does NVIDIA's current stock price already perfectly reflect its future as the backbone of the AI revolution? Or, considering the literally unprecedented scale we've looked at today, is there still room to run? Keep these massive stakes in mind as you watch the markets next week. Thanks so much for joining me on The Explainer today, and keep learning.